Surge as Trump announces a delay for 90 days to global tariffs. But what next? How do you see the volatility for the next 3 months?
Well, I think that you have to break a few eggs to get an omelet. There's going to be some, modest slowing in the economy due to indecision and lowered consumer confidence. But this is a long-standing trade imbalance that started post-World War II. The United States said, we will allow foreign countries to tariff us. We will not tariff them as much so we could rebuild the world. So this is 80 years now since World War II. The world is rebuilt. It's time for some normalization. And I think that's what you're seeing here. What you're going to see are reasonable deals. You're going to see more balanced trade, and it's going to be great for the world moving forward. So short term, a little bit of indecision, a little bit of slowing, but I think you're going to see a great reacceleration. It's going to be good for the entire world.
But how do you see the 90 days pause itself? Do you think it's only a part of Trump's strategy to create maximum negotiating leverage for himself?
Well, look, it clears the way that the deals don't need to be rushed. So he can address the non-tariff barriers to trade. It's not just the economic tariffs, the dollar value of the tariffs on goods coming in. It's the regulations and the restrictions, particularly in Europe and in other regions, that make it very, very hard for U.S. businesses to do business in their country. So I think it's certainly partially about the money, but it's also about access to global markets, fair and reciprocal access, a fair trade deal. And 90 days is a very short window to negotiate with some 70 countries that have come to the table. But I think they'll be able to get it done, or at least extend it as they make progress.
How do you see the immediate and medium-term economic impact of Trump's revived tariff war on the U.S. economy itself?
Yeah, I think, look, we had some indecision and we had some short-term drop in consumer confidence. But I think after today and after they see that there is a level of rationality in the administration and they want to move ahead with fair deals, I think that's going to give people a lot of confidence to move ahead. And as these deals start to hit the tape in coming weeks, mini deals and then major deals, I think people are going to start to invest. People are going to start to get excited. And it's going to be a very positive thing moving forward.
What about global ripple effects? Which countries are most vulnerable to the fallout of these tariffs, and why?
Well, the only country that's really going to be dramatically impacted is going to be China until they come to the table. I thought President Trump offered a reasonable olive branch this afternoon. His talk was very conciliatory. He said that President Xi was a very smart man that wants to make a deal and that they were going to make a deal. So I think they'll come to the table because 125% tariff is effectively an embargo on Chinese goods until the dialogue begins. But historically, they'd had a relationship where they could talk, where they could work things out. I think this time will be no different. I think the other thing that people have to keep in mind is the currency factor. This reminds me a lot of the Plaza Accord in 1988, where the U.S. brought major countries to the table in an effort to devalue the U.S. dollar to make them more competitive. So we may find it's a combination not only of tariffs, but maybe a normalization of currency valuation to level the playing field and make it easier for us to import or export to other nations. Maybe part of the full package as we move forward. That remains to be seen. There have been rumblings about something called a Mar-a-Lago Accord, which would mimic the Plaza Accord that Reagan did in 1988. So to be determined.
We also know China is still struggling with purchasing power domestically. And how do you think these new tariffs will affect China's economic resilience?
Well, if you look at the math of their tariff, of their exports to the United States, it's become a smaller and smaller part of their economy. The government is focused on stimulus and domestic consumption. So we're going to see the companies that deal with domestic consumption, kind of the toll takers of China, do the best. Okay, the Alibabas, the Tencents, the major players in domestic consumption, as Xi has laid out, they want consumption to be 70% of their economy over the next decade or so. So those are really going to be the huge beneficiaries. And alongside that, I think you're going to see massive amounts of stimulus going back to rejuvenating the economy, focusing on domestic growth, and that's going to be a very, very good thing for China and most likely investors in these large Chinese national treasure companies like Alibaba.
And how do you think the impact for emerging markets like Indonesia?
Yeah, I think you're going to see emerging markets do exceptionally well. Part of this package is likely going to be a weaker dollar. I think we're going to see a dollar continue to weaken over the next 12 to 24 months. And historically, in those environments, emerging market equities do extremely well. So I think you're going to see more fiscal and monetary stimulus in the developing world. I think you're going to see a weaker dollar, and that's going to foster capital flows into the Indonesias of the world that have phenomenal demographics, a very young, industrious, educated population, and other emerging market countries, not only in Asia, but all over the world. And I think China will be a great beneficiary once they come to the table and negotiate an acceptable deal. You know, the key with the deals is both parties aren't completely happy when they walk away from the table. They meet in the middle, and I think that will be the case here. Both will get some things they want. Both will lose some things that they would have liked to keep, and we'll move ahead to a very productive relationship. I think this administration differs from the previous administration in that this administration seems very open to talking. You know, Trump's negotiating strategy in business for decades has always been first you punch your counterparty in the face, and then you offer him the ice pack to help heal the wound. And I think that's what we saw. We saw the punch in the face in the last week. Now he's talking a lot more conciliatory, wanting to structure fair deals, speaking highly of Xi, and bringing him to the table to do something that benefits both parties.